Hello traders, in this video I'm going to talk about the correlation between the euro dollar and the dollar index and the power of the supply and demand imbalances and the bigger time frames. And hopefully at the end of the video you are going to learn a few things, because this is a very important concept. Okay, so here in the middle of the chart we have the euro dollar daily time frame. You can see here the daily time frame, okay? And I have drawn this area of supply there that is in control. And did you know that when a supply level is created on the euro dollar, a mirror image demand level is usually created on the dollar index? Let me take a look at the dollar index. Well, let me do something here. I'm going to change this to this, to timeframes template, and I'm going to do this. Okay, so whenever a supply level is created on the euro, there is usually a mirror demand level created on the dollar index, or vice versa, because they are highly correlated. The dollar index is made of a huge percentage of the euro and other pairs, and it just reflects a combination of those pairs. And it's mostly the euro that compounds the dollar index. So today I'm going to dive deep into this correlation that moves the global Forex markets, that will allow you to take short-term Forex trades, intraday, scalping Forex trades, and obviously swing and long-term Forex trades. And that ignoring them, it can cost you trades, okay, and money obviously, that you are missing or losing because you are selling into demand or buying into supply on the euro. So until the end, you should stay, because you will see why patience and understanding balances is the real edge in trading. You have to do things differently to what most traders do, because if most traders lose money, you have to find an edge. Otherwise, you are going to lose money as well. As simple as that. So, supply level on the daily. Okay, the daily is in a downtrend on the euro, printed new lows yesterday, and today it's about to, and the same goes for the dollar index on the right side with the daily time frame, daily in an uptrend, demand control, and very strong reaction. And I am recording this video now because I've been quite busy in my personal life lately, but these imbalances are mentioned on the website way before they happen. So if we go here, the website, so don't forget, and I search for the euro dollar, you're going to see the updates. Let me see. Let me go back. So for example here, September 29th, daily downtrend, new imbalance at 1, short bias, waiting for the pullback. It didn't happen. I posted this one from my tablet because I was not at home. I painted the number manually, drew it manually. Supply in control, attempting to play out October the 2nd, which is like 3 days later. Daily downtrend, October the 3rd, is playing out. This Monday at 8 a.m. I updated it, playing out, managed positions, playing out, trying to bring new lows on Tuesday, 2 days ago. And usually what I do is, now I should update this, okay? Let me show you what I do usually on the website as these are happening. So we'll go here, okay? This is how I work, and this is what I'm going to do. This is how I work on a daily basis to update some of the assets. I'm going to use my application to do this. I'm going to go to the website. This is the latest update on Tuesday. I'm going to say daily downtrend, daily supply has played out very well. Short positions should be managed. Shorts are new imbalances. We'll paste the screenshot, and there you go. Submit, and this is an update. Okay. So as you can see here, I am remembering users that the 3 months is in a downtrend and supply is in control, very strong supply, and that's why we are short in there, okay? Because we have the bigger picture in demand supply level in control. So, and what we have here is, like I said, if the euro dollar creates a supply level, why is that created? Well, because our bigger picture, the supply level is in control. So I'm gonna go over that later, okay? So there is it's not a hidden relationship between the euro and the euro dollar, because I believe everyone knows about it, but there is a powerful inverse correlation or relationship between the euro dollar and the dollar index, DXY, and one that most traders completely, overlook, okay, because they are too focused on indicators or probably the news, the latest GDP for the US, the unemployment rate, the FOMC. I did that many years ago. I'm not doing that anymore. I haven't done that for many, many years. So when a demand level like on the dollar index is reached, or a supply level on the daily is reached on the euro dollar, probably you will be focused on other indicators and using the smaller time frames, maybe the 1 hour time frame for short term. And you see that, well, if you start adding like indicators, let's see, I don't know, indicators like moving average, okay, exponential, twice, so we'll add it twice. Oops. And then I will use, I don't know, the 6 and the 12, very fast ones, okay. I'll use this, the 6 and the 12. So as price was rallying there, okay, we have like a EMA crosses up and down there, EMA crosses there, EMA crosses there. All of them played out. The EMA crosses played out, okay? But then suddenly it just drops. And then we have like another EMA cross up and it doesn't work. Another EMA cross, it rallies a little bit and then it drops. Another EMA cross rallies a bit and it drops, okay? It rallies and it drops, okay? So if you are ignoring this imbalances, okay, I'm gonna just delete this. This is just an example. You can use an indicator, the Bollinger Bands, anything, okay? It's just an example of what happens if you are trading smaller time frames when you find this, you bump into this obstacle in the shape of a daily downtrend with daily supply level in control. So when these demand levels and supply levels on the euro and the dollar index are created, you shouldn't focus on the news or indicators, okay? You just should wait for the pullback patiently, okay? Supply level is typically created on the euro dollar, and daily it will be a mirror, as I said, and it's an echo, and it echoes across the Forex universe, let's say, because if the dollar index is like this, then most of the cross pairs, the dollar versus the Swiss franc, the dollar versus many other, like the yen and many others. On the dollar yen, it's even better, because on the dollar yen we have like the dollar getting stronger and then the yen is getting very weak, as I explained in the previous video. So that is like a double correlation, creating new demand levels, as I explained in a previous video I shared with you too. Okay, so that's like a double correlation, because if the dollar index is rallying and reacting to a demand level over there, it means that the dollar is going to get stronger, okay? And then if the yen is getting weaker, that means that the yen, it means that the dollar is going to get stronger, okay? Because on the right side we have the yen. If it gets weaker, it means that the dollar is getting higher, and it has created a brand new strong level of demand level over there, with a very strong gap there, due to the election of a new prime minister and in Japan last Sunday. The markets reacted positively to that, and the reaction was a new strong demand level, as I explained in that video on my YouTube channel. So let's go back to the euro dollar and the dollar index. So that's the creation of this mirror, okay, that we have here. This the reflection that we have between the euro and the dollar index is because, as I said before, the euro makes up almost 60% of the dollar index DXY's composition, meaning that when the euro weakens, the dollar strengthens. When the dollar strengthens, the euro weakens. Okay, the dollar weakens, the euro strengthens. So that's how it goes. Okay, so taking both trades is like taking double your risk. So you either trade the euro or the dollar index. What happens sometimes is that you should trade the first one that gets hit. If the euro dollar is the one that is hit first, then you go short on the euro, and then the daily demand level on the dollar index gets hit. Okay, then if you are already short on the euro dollar, it doesn't make sense that you go long here, because you would be doubling your investment. Imagine that you are trading 1% of your account here on a short position on the euro dollar forex cross pair, and then you trade another 1% because that's what your trading plan says. You should take 1% risk or 0.5% risk on all your forex trading positions. But you should also have a modification on your trading plan that says if you are trading a highly correlated asset, like the daily on the dollar index, on the XY, on the euro, just take one of them, the first one that gets hit and takes control. Okay, so what we don't trade these based on fundamental analysis or macro data. We only trust price action on forex and supply and demand balances on forex too, and it happens on all assets. So the thing is that this is a real example. If I go to here and I go to the dollar index, we're going to see more or less the same thing upside down, because I've been updated all of them. So dollar index is in control, trying to play out, trying to play out. Okay, that one I said. Whereas imbalance, long bias, waiting for some bullishness, it could drop to the daily demand level, and then it dropped to the daily demand level, played out, and I'm going to update this. Okay. Oops. As I always do. So here I will say daily uptrend. Sorry, daily uptrend. Daily demand level played out really well. Longs at new imbalances, we need a bearish leg. I paste the screenshot, submit it, and then everyone will have access to it. Okay, so that's how I work, and that's how these imbalances are shared with the community. And this is supply and demand in action. Okay, and this is always before the fact. Okay, as you can see here. So, and I have tried to update most of the trades. There are hundreds, so sometimes it just takes me some days or weeks to access the long-term position ones. Okay, on the stocks and everything. So this is what we have. Okay, so these the way that they painted these levels, okay, the demand level at $97 and the supply level on the euro forex cross pair at 17.79 is not random. Okay, that wasn't random. These zones were born from institutional activity, large buy and sell orders that leave behind footprints in price, like this daily supply level on the euro and the one on the daily. Okay, when these footprints align inversely correlated across correlated assets like the euro dollar and the dollar index and dollar versus the Swiss franc, the probability of the strong reaction skyrockets. Okay, and that is exactly what happened. So when the daily demand level on the dollar index gets in control at around $97 per share, the euro rallied into that supply level at 117, and that is not magic. That's pure supply and demand mechanics in action. So the question now is what happens in the smaller time frame, because you can use the smaller time frame too. Okay, when price starts reacting to this, then you can see here that we have new bearish impulses, new bearish impulses, new bearish impulses, new engulfing pattern, bearish impulses, engulfing pattern, bearish impulses. And when you go to the smaller time frames on the daily, you can see now bullish engulfing pattern, a bullish gap, strong rally, bullish price action. Okay, so there's bullish price action all over, and bearish price on the dollar index, and bearish price action on the euro dollar forex cross pair, because the supply level is in control. Okay, But the thing is, why were these daily imbalances created? Why now? And this is a very, very crucial question. Why now and not 2 weeks ago or 3 months ago? Okay? Because what is happening here is on the bigger time frames, the quarterly imbalances have also gained control, and they are very strong, and we've been expecting that. Okay? So there is a long-term supply level on the quarterly chart on the euro dollar in control. Look at the strength of this impulse. So imagine this was a 1 hour time frame. Imagine that. 4 hour time frame, daily time frame. Would you go long against it? No way. Okay, no way. You would go short. So the same applies. I mean, this is not a 3-minute chart. This is a quarterly chart, 3 months of time. And this bearish impulse happened during the beginning of the 2022. And then 3 years later, okay, price rallies into that level and starts dropping, creating that daily supply that we've been talking about. Okay, and the same happened a long time ago. Okay, why this rallied on the euro? Why the euro rallied after going below the parity level at 1? Why? Well, this is Oanda Forex broker, and Oanda doesn't usually have enough data. Data is, I don't know why they don't show it, because it doesn't weigh too much on their service. I don't know, but they could have that data. So if you go to other brokers, sorry, other exchanges like the ICE, okay, you're going to see, whoa, we've got much more, my friend. Many years more, because the euro was created in 2021, I believe. It wasn't created on January 2002. Okay? So if you have access to that data, you will see there was a 12 months demand level there, and that is the rally happening. Okay? Look at the strength of that level over there. So what happens is that price has been rallying on the euro strongly because of that. And now price is dropping on the euro. Well, I'm going to switch to Oanda. Well, I'm going to keep this one, but I'm going to switch to the daily and draw this imbalance on I. Nice. So price dropped down there many months ago, rallied strongly. There have been many trades for shorts and for longs, etc., etc. But now that the bigger time frame picture is telling us that the 3 months area of supply is in control. Okay, yeah, look at that. All this blue at the top, all this is the 3 months, the quarterly imbalance for the euro dollar. So this is I believe this is an edge and a great Forex trading strategy that can give you lots of opportunities for swing trading on Forex, even shorter intraday scalping. Now, given that you know that we have supply and control, short bias minimum here. From here, it could rally a little bit, or it could draw lower, but there's a lot of room for price to keep on dropping on the euro dollar. And when you go to the dollar index, what do we have here, my friends? Well, let's switch to the 3 months, and we've got also this mirror demand level on the 3 months that gain control, and that is providing us with new demand levels over there that are playing out. And if we go back to the 12, you are going to see that the dollar index has been dropping because the 12-month supply level was in control. And I recorded a video about this 1-2 years ago. A few updates, but unfortunately YouTube deleted my channel with thousands of subscribers. Somebody hacked my channel, submitted a video. I don't know which video. I contacted YouTube. Nobody responded. The IT finally decided that yes, my account has been hacked, and they didn't show me the video. They deleted my account. There was no way to recover it, and that's why you are seeing that I have only now 1,600 subscribers. Nothing. Okay. It took me years to reach 30,000, and I'm obviously not buying any subscribers. That's what most people do. Now, well, those who are lucky, because I believe if you found me, you are lucky, because most traders are not doing this. They are ignoring supply and demand. Then, well, you're welcome. So, and that's where the real story begins. Okay, the bigger time frame supply and demand levels, and the higher time frame always has the final say. daily and weekly setups on Forex and dollar index and others only play out when, or most of the time, not only is not the right word, play out when the larger quarterly imbalances take control. That gives much more weight and probabilities and odds to the imbalances on smaller time frames in Forex. And that's why ignoring the higher time frames is one of the biggest mistakes Forex traders do. Okay, so dollar index price today is at around 98.80, 90, and on the euro we have the euro at 116.23 euro dollar price today. Okay, so the power of these long-term imbalances is insane, as you can see. And remember, I am sharing them way before they happen. Okay, they act like, I don't know, a magnet, gravity. Okay, and you can't fight them. You can only trade with them. Okay, but if you are trading the 1 hour, 4 hour, and daily is the top time frame, it's going to be difficult to know why things are happening. So, as you probably already know, if you don't know, I'm going to tell you, I'm going to remind you. Since the the euro dollar, come on, Franco. Since the daily, the dollar index, daily demand level is on the dollar index is rallying. Most USD cross pairs, I showed you before, the US dollar versus the Japanese yen, the dollar versus the Swiss franc, the dollar versus the CAD, will also show new demand levels and rally because they are highly correlated. That is like a domino Forex effect, domino effect on the Forex market. And that's where our next opportunities come from. When the dollar strengthens from a strong demand level, we get a chain reaction to buy demand zones in many other places. Okay, if we take a look at the dollar versus the Swiss franc, we've got a demand level here playing out really well. Okay, or I don't know, the dollar CAD, I believe we've got demand level on the monthly in control, and we've got now another one here. Okay, so if you go to the monthly, we've got here one level trying to play out. So there are so many trades now playing out, and new demand levels are being created because of this domino effect on the Forex market caused by the USD and the euro dollar cross-pair correlation. Okay, this gives up more high probability entries to trade with the institutional flow. So all this requires one very important thing. It doesn't require that you buy expensive courses. You will be welcome if you join our community at setandforget.com. And there is patience. That's what you're forgetting. In order to trade this one, you need to be patient. Wait for 4 days, sometimes for 4 weeks, sometimes for 1 month. It doesn't matter. You just keep on trading other assets. But patience is the trader's superpower. And this is where most traders fail. They want to chase every single candlestick. I'm going to go back here to the dollar index. They want to chase every single candlestick, every signal, every headline. News, event, FOMC, GDP, whatever, those are already priced in the market. You don't care about them. You shouldn't care unless you are scalping the 1 minute and 5 minute time frames on Forex. Scalping Forex requires that you don't do anything. You sit on your hands when you are trading news, when news are going to happen, because it could blow up your levels, okay, your entries. So real trading is about waiting, like here on the dollar index, and like here waiting for 4 days on the euro dollar. Okay, like a sniper, not a machine gunner. Okay, just like a sniper sitting underneath a tree waiting for the enemy to appear, like in the movies. You just don't chase in the open field. Where are the soldiers? No, you will be killed instantly, because there will be snipers who are patient, sitting perched on a tree, waiting for the enemy to show up silly in the middle of the field. So when you learn to wait for price to return to the supply levels and demand levels, like here on the euro dollar and the dollar index, these key demand supply levels, you will start trading like institutions do, like snipers, okay, with calm confidence instead of emotional chaos. So remember that your job isn't to predict, it is to prepare. Okay, so the euro dollar and the dollar index DXY correlation is one of the cleanest examples. This is a clean example with the bigger time frames too, as I said before. They are also correlated, supply, demand, with these examples. Okay, is a very clear example of supply demand levels symmetry in the Forex market. If you can master reading price action, these mirror movements on the shape of supply on the euro-dollar Forex cross pair and the dollar index, okay, demand level, if you master reading these movements and align your trades with the higher time frame imbalances, your probability of success, the probability curve, shifts dramatically in your favor. That doesn't mean that these levels are going to play out always, okay? So forget about NFP, CPI, interest rates, FOMC, all that is speculation, because those are distractions. The charts already tells you on the euro-dollar Forex chart and on the dollar index demand level that those are distractions. The chart already tells you everything weeks or even months before the news. And that's the set and forget way. And I am Alfonso Moreno, the creator of this strategy. And if you like this video, click on the like button and subscribe to my channel. And if you want to join the community, you will be welcome at Set and Forget.